all cash offers significantly stronger than the ones that involve loans? This is the question that pops up all the time, especially with the foreign buyers. In different countries, you would have a very significant advantage when you operate with all cash, when, in other words, you have all of the money to purchase the property right here and right now. Is this still the case here in the US, specifically in Los Angeles market? So let's look into this. First thing first, what is the main difference in a transaction that involves all cash or that involves financing or the loan? So number one difference is that the transactions that involve only cash most of the time are not going to have loan contingency and appraisal contingency, which means that the buyer will not be able to get out of the deal if he or she cannot get the loan, because loan is not involved in this transaction. Same thing with appraisal. Most of the time, all cash transactions will waive appraisal contingency, which means that the buyer most of the time will not even perform appraisal, or if the buyer still decides to perform appraisal, also all cash deals most of the time will not have an appraisal contingency in them. What does that mean? It means that the buyer will not be able to get out of the deal if the property does not appraise. And with that said, most of the time, all cash transactions don't even use appraisal because the buyer is willing to pay whatever he wants for this property and does not need bank's approval or confirmation that the property is worth what it is. However, sometimes some buyers do decide to order an appraisal even if they're paying for the property with cash. Therefore, the transactions that don't involve loan and appraisal are less risky, which makes the seller have less chances to fall out of escrow working with a specific buyer. So in a sense, yes, absolutely. All cash offer does bear certain advantages to the loans and to the appraisal. So yes, if the offer consists of all cash compared to the offers that will be contingent on the loan, absolutely, the buyer does have certain advantages. However, those advantages could be taken away by removing loan contingency, even if the buyer decides to go for that and receive the loan at the end of the day, and by removing an appraisal contingency as well. Whether or not those things are smart to do is something that you would need to figure out for yourself. Working with a professional realtor will always help you understand your options, your risks, and make your offer as competitive as it is. The other part to it is working with a qualified lender. A lot of the time when you work with somebody that knows what they're doing and somebody that does a lot of research and investigation on your financial profile up front, you would be able to minimize the time you would need to receive the loan. There's certain hacks and tricks on how you can structure the deal and still be able to get out of it if needed without even having the loan contingency. But obviously those are tricks of the trade that you would find out by working with somebody that knows what they're doing. All in all cash transactions are a little bit faster to do. However, nowadays, especially when the lending industry is not as busy as it was 2 years ago, let's say, nowadays it is still possible to close transactions with the loan in approximately the same time as transactions with the cash, plus minus a week or so. And if the seller is willing to wait for another week or two to close the transaction that involves the loan, those offers would be very much compatible. The other thing that will differentiate transactions that involve all cash and transactions that involve loans would be the time needed to close this deal. Most of the time, transactions that involve cash could be closed in a matter of 7 to 14 days, where the transactions that would involve loan would usually take 3 to 4 weeks to be closed. And that's if we're talking about residential real estate and residential transactions here in Los Angeles. The reason I'm bringing it up is because in other states, real estate works slightly differently, and the time that you would need to close the transaction and receive the loan could actually differ state by state. So in some other states, maybe you would need a little bit more time to close the deal, especially on the East Coast. A lot of the time, you need a little bit more time to close the deal. So maybe in those markets, the difference between the offer that contains financing and the one that doesn't might be a little bit more significant than it is here in Los Angeles. So real estate is very property and case specific. In certain cases, all cash offers would have a significant advantage. In the other ones, not so much. Therefore, you need a qualified professional that will help you assess and analyze your particular situation and make a determination on whether or not all cash offer is the one that you need to go with.